Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking back in on the dollar, gold, and miners, and a lot to catch up on. It was a pretty eventful Friday in regards to key levels of the dollar and gold being hit. So what I want to point out first is whenever we see a pullback, trying to find support levels in terms of where we can see a bounce. So as we started to break the higher low pattern on the hourly, this is gold, we were looking down here at this support level, the low of this consolidation. That was down at 1227.58. So as soon as we broke that, we looked down to the next low of consolidation. We can see back here, had a little bit of a consolidation period. And the low that was hit there was 1221.50. So that's the next support level we look to. And of course, the individual indicators as we approach that level are important. So we can see that the hourly RSI was down at 23.24 when we hit that support level. So the odds increase. The lower the RSI, the higher the chance of a bounce off of a key support level. So we ended up bouncing off of 1221.46. Next candlestick 1221.50. So by 4 cents on a $1,200 instrument here, we saw that level hold. And now that's a key support level to be putting a line of support there to keep an eye on in the future. So how we set up heading into yesterday morning is after we did that video on Thursday, we got that rejection on the back test of resistance and pulled back very significantly in terms of the amount of pullback in the amount of time that it took, which is why we were oversold. So we saw the oversold bounce begin to play out. And on oversold bounces, we anticipate them to be short term and just to cool off the RSI level. So that's what began to happen as we headed into the morning. We've got 6 a.m., 7 a.m., 8 a.m. So we started pulling back from the oversold bounce and seeing a little bit of weakness. So the bulls were seeming weak on that oversold bounce as we were heading into the day. But what happened on the dollar right at about 9 a.m. Eastern? Remember that level I keep pointing out to break the lower high pattern on the daily time frame, 101.02? Well, we hit a top of 101.01 to a 1 penny difference, hitting that resistance level, and look on the hourly time frame at the reaction we had. So we hit the resistance by 1 penny, and at 9 a.m. we started a pullback, and it was a 3-hour pullback, fairly significant. So look at 9, 10, 11 a.m., and we compare that to gold. Look at 9, 10, 11 a.m., big time breakout and continuation on this oversold bounce. So had the dollar broken 101.02 resistance and continued to the upside, we likely would have seen this very weak bounce attempt on the oversold bounce on the hourly and continuation back down to backtest that 1221 support. But because we rejected in the dollar and saw that significant weakness in 3 hours, we saw a big time gold move to the upside. And now what was happening with the S&P 500 while that was going on, again, you want to have multiple monitors. If you're serious about trading miners and you're doing shorter term trading, you need to be watching the dollar, gold, and the market, because the market's in blue sky breakout with no resistance all-time highs. And that occurred on Thursday, and it carried over with strength on Friday, and there was no sign of any weakness at any point on Friday on the 5-minute time frame if you check out the SPY video that I just did. So knowing that the market is at all-time highs and very strong, and knowing that gold was undergoing an oversold bounce and seeing some momentum because the dollar was pulling back, we can anticipate that the bull miners are going to have a pretty solid day because both gold and the market are going in the same direction. And as I said with that little boat example in a few videos ago, it's essentially, normally you have with the inverse correlation between gold and the market, you have a bit of a headwind where you've got the gold strength pushing the bulls higher, and if your little boat is gold or is miners, you've got a big wind behind you pushing your back forward, when gold's going up, but a little bit of a headwind pushing back at you when the market is going down at the same time. But if you have the market and gold going in the same direction, you have both winds going in the same direction, pushing that little boat a lot faster forward. So that was what was occurring on Friday. But look where we saw resistance. So we had the high of the initial little bounce attempt at 1235.56, and although we did break that level, it was met with profit taking. And this line that I pointed out in the last video, how I like it so much because it was resistance a bunch, held a little back test as support, another back test as resistance, and here we are rejecting from that level again. So the bulls are still holding up strong, and even on this pullback, we saw a $7 pullback on the reaction or the rejection from that resistance, but the miners didn't really pull back that significantly, and that's because the market was holding strong and other factors that were keeping the miners holding well. So it does look like we're going to test this resistance again on Sunday night when we open again. And if we turn that level into support, this will be significant because the daily time frame is very healthy consolidation at this point for gold. And look at that 10-day moving average. I keep bringing up this 10-day moving average because it was our initial bull signal back here. And we have, since we turned it back into support after that consolidation, we have back tested it 1, 2, 3 times and held it all 3 times. So that 10-day moving average is 1222.07. So this is normal healthy consolidation. Pretty contained. The bulls bought the dip on Friday. And the bulls definitely don't have anything to worry about on gold at this point in time. Now, if the dollar breaks 101.02 on Sunday night, Monday morning, then we can anticipate a little bit more pullback in gold. But this candlestick on the daily for the dollar hitting that double top is a weak candlestick. So we could very easily see a pullback. The bulls will attempt to form a higher low, perhaps around the $100 area, and then attempt to make a higher high. So keeping a close eye on that potential bearish reversal head and shoulders pattern on the dollar. Hasn't played out yet, but we will be watching the support very closely if we do approach it again of 99.43, and that is an ideal scenario for the gold and miner bulls. They want to see this support break because that is going to indicate that gold is likely going to continue and head to higher highs up to the 1250s. So all in all, gold holding well, but has a key resistance level to watch. The dollar, a key double top resistance to watch. And let's check in on these miners now, how they fared. Healthy consolidation. It looks really a lot like gold on the daily, where we pulled back. We had the gap down open because we saw that continuation of weakness overnight. But the bulls bought that gap down because of that scenario setting up. But gold was in the middle of an oversold bounce. The dollar rejected from key resistance right when the gold bulls needed some fuel to continue that oversold bounce. And with the market strength in the favor of the bulls as well, all signs were looking bullish. So I did anticipate a bit more of a pullback, admittedly, in the afternoon. I thought we were going to reject more significantly from this resistance line on gold, and we did have a $7 rejection, but like I said, it didn't really amount to much on these bull miners pulling back. So the bull miners are still in control. We closed at the high of the day. We're watching the high of this move. We have a range now. So for GDX, we're looking at 25.71 resistance, and support is down at 24.60. And the weekly time frame, still a fairly strong close on the weekly. A little bit of an upper wick of profit taking, but not significant and not enough to be a bearish reversal candlestick. And we look at GDXJ, and same thing. We actually did break the high of Thursday for GDXJ, so a little bit more strength, but we did reject from the upper Bollinger Band resistance. The range we're watching here is 43.01 resistance and 40.26 support. So if you're watching NUGT or JNUG, you're looking at the low of Friday as support and the high of Wednesday as resistance. These bear miners saw that very short term because we know we're fighting the trend. We need to be quick to lock in profits. We need to have stop losses in place, and that bounce did not amount to much at all. We did see a little bit of a bounce, the low of 24 all the way up to 27. So over a 10% bounce, but short-lived as the bears were back in control of the bear miners to end last week. So heading into Sunday and Monday morning, I'm going to be watching 101.02 resistance on gold and 12.35 resistance. I said that wrong. 101.02 resistance on the dollar and 12.35 resistance on gold. Those are going to be the key levels that are going to dictate which direction to be looking early next week. I appreciate you watching, and we'll check back in on Monday.